Stream, you're watching IPO Watch with me, Nandita Khemka. Well, it's one of the much awaited IPOs. In fact, it's the first from the Bajaj stable in over 3 decades. I'm talking about Bajaj Housing Finance. The 6,560 crore rupee initial public offering has opened up for subscription and it will run till Wednesday. In fact, ahead of the IPO opening, the company has already raised 1,758 crore rupees through the anchor book. And you've got some marquee names who participated through the anchor book, the likes of Govt of Singapore, Fidelity, Morgan Stanley, Abu Dhabi Investment Authority, Nomura are some of the marquee global names. In fact, we are joined by the management here to talk about the future outlook and growth plans. So joining me is Atul Jain, who's the managing director of the company. Atul, great to have you on Moneycontrol. First of all, many congratulations. It's a historic moment for you guys. It's the first Bajaj IPO after 31 years. And you've seen participation from marquee global as well as domestic names via the anchor book. And just want to mention, nearly a quarter of the issue has already been subscribed within 1 hour of IPO opening, right? So how is the feeling really? How would you describe the feeling?
Thank you, Nandita. Thank you for having me on your show, and thank you for your wishes and good words, kind words, what you have spoken about us. Yes, the anchor book got over on Friday, and which is in public domain. We had put it out on the public. I do not know the subscription numbers as of now because that's what we have not tracked. But hopefully, with the wishes and with the, we'll get a good response, and the issue should go through comfortably. That's what we are excited, and definitely we are humbled by the response what we got from the institutional investors you called out on the all marquee investors. I think that's a legacy we are carrying. We have the burden of legacy of the Bajaj Group. That's where people are putting faith. The investors, the institutional investors put their faith, and hopefully public issue should also be fine.
Right, let's talk about the purpose of fundraise, right? You are raising 3,560 crore rupees via the fresh issue. How would you be utilizing the funds, and how long would the would it support your growth?
So, Nandita, the issue proceeds, which are primary, are going to be used for organic business growth of the company, because we are a growing company, and as a growing company, we require frequent bouts of a capital. The issue is supposed to take care of our primary capital needs for a reasonable period of a time, because the period can vary depending upon the rate at which what we grow. So there's no specific period we can call it, but it should be for a reasonable medium term, take care of our primary capital need. That's how we have constructed the issue.
Bajaj Housing is growing ahead of the industry average, right? Tell us, what kind of growth have you seen over the years, and are you confident of maintaining the historical growth run rate?
So, we have grown at the rate of a 31% CAGR for last 3 years, which is, and 29% for last 5 years, which is as part of the disclosures in the prospectus what we have filed. Now, future growth, the industry, see, if you look at, Nandita, the industry what we operate in, the two dominant portion of the industry are home loans and loan against property. Both are very, very large markets in themselves, and both market sizes are very large. The growth rate in both the industries are estimated to be 13 to 15% as we go forward from here by various estimates. Now, at a very large industry, while our absolute size may look like 97,000 crore, but compared to the industry size, we remain reasonably small, or a reasonably smaller portion of the market is what we have today. Industry is large. Industry keeps on growing at a good rate, what it is projected to grow. We should be able to grow in a healthy way. There is no particular number what we track or we want to grow. It's a question of an opportunity in the marketplace and our ability to take some space. Because if you to grow higher than the market, that means you're taking some space from somewhere. At a point of a time, if we have an ability to take some space and market opportunity presents, we are happy to grow at a faster pace than the industry.
Right, in terms of your asset under management, it stands at almost 1 lakh crores as of the June quarter. But the home loan market is extremely large, right? And compared to that, would you be looking at scaling up significantly to cash in on the opportunity that the home loan market provides?
So our ambition in the long term, Nandita, is to become one of the larger players in the mortgage, because mortgage is a large industry. So ambition is always, and aspiration is to become one of the large players over a period of time. yes, in that sense, what you are calling it is right. So over a period of time, we would want to be a large player and continue to grow.
And what about your asset quality? How are you placed in terms of that? I know, Bajaj Housing has a superior asset quality when you compare it to peers. But going forward, what is your outlook?
Again, that is asset quality is a mix of two factors. As of today, what is the asset quality, what you should see as a published number? One is the customer mix, where the focus had been in the past, because asset quality today in a mortgage is reflection of what was your focus as a customer segmentation in the past. So our focus primarily in the beginning had been on you can say the premium side of the market or the upper end of the market. So salaried customers is our dominant portion, and that also in the larger markets or a different kind of a market. Now, as we have grown into all segments and all subsegments of the market, because that's our ambition is to be covering all segments of the market, there can be a bit of a differential in the asset quality, again, which is should be an acceptable threshold. Again, the second factor which I said is that which is determining the asset quality as of today is also comparatively lower vintage of the book, because we are not a very old company. We are a roughly 6.5, 7-year-old company. So our comparative lower vintage of the book also helps in the numbers what are there today. Again, today numbers cannot be any guidance, Nandita, for future, because that will depend upon the market situation and the customer segmentation, what we continue to be. Our aim would be to continue to deliver better performance. However, can't take a guidance as a current numbers cannot be taken as a guidance for future numbers.
All right. Of course, you alluded to the fact that you are more prominently present in the prime segment. But would that be the differentiating factor then vis-a-vis your peers? Or are you planning to change the strategy in future and increase focus on perhaps affordable housing as well?
So, Nandita, we are present in all segments. Our dominant portion had been in the prime. It is not that we are not present whether in affordable or a non-prime, because the definitions of affordable vary from a player to player. We had been present in all segments of the market. At a point of a time, the focus can be more in one segment, which was like as we started the company, our focus was largely on the prime segment. But over the years, we have gradually expanded. And as we learn the nuances of the market or understand the risk-return ratios of all subsegments of the market, we'll continue to expand our presence in all subsegments. So, there is no exclusion of any segment what we will be
doing. Okay, and how are you really planning to tackle the competition? You mentioned that you are much smaller in size compared to peers. So would you look at more innovation in terms of products and maybe look at diversifying your loan book? And also, how are you really viewing the competition landscape now, especially after the merger of HDFC Bank?
Nandita, the market what we operate in is, there is quite a bit of a competitive intensity, because there are all large banks and large NBFCs or HFCs are present there in various subsegments of the market. The prime market is also a place where banks are largely present. Now, that market has two requirements. First, for you to create a space and grow in that. One is your brand has to be accepted, because that customer wants to deal with a company where the brand is acceptable to the customer. There, our brand of Bajaj, because Bajaj has a heritage brand in the country of a 90-year vintage, acceptance in the general public at large of trust factor. Because in a home loan, it is very essential for the customer to trust the brand where the person is taking a loan. And our image as a subsidiary of Bajaj Finance, the parent company, is ability to be very agile and a positive image in the financial services. I think that helps us to get to the customer segment what we want to. Then the pricing, because in this segment, again, the pricing becomes given that you have to competitively price the proposition for a customer to choose you. Of course, then the ease of dealing with you, digital way or ease of process, it helps to differentiate the product. So all three combination put together, where it's a brand acceptance, ability to offer the products at a very competitive pricing, and ease of process, ease of dealing with, all help in creating the space for us.
Right. Let's also talk about your products, right? You have doubled your developer loan portfolio over the last 3 years, and that too without any significant asset quality deterioration. My question to you is, going forward, will the product mix change over the next few years? Would you make any adjustments there as well?
So, Nandita, in our case, the product construct is driven by two factors. First is the regulations, because regulations say 60% of our assets has to be residential and 50% of the total assets have to be home loan. So, the remaining assets, only 50% can only be the combination of various mortgage products, which are whether lease rental discounting or developer finance or loan against property. Now, and then there are the segments which we want to be in, like construction finance, because it is quite tightly integrated with the primary objective, which is a home loan, because being present in that segment gives you a leeway or gives you an introduction to the market, because the primary sales of a home loan happens at the developer sites where the customers goes and buy the homes. So both those segments, which is a part of a residential, are core. Then the other products, depending upon at a point of a time, the market position, Nandita, that market growth opportunity, risk returns, because at a point of a time, there can be differential equations on whether the returns in a particular segment or risk perception in a particular segment. We are agile to keep on mobilizing our balance sheet construct. So home loan has to be the dominant mix because of the regulatory constraint, regulatory requirements, and also what we want to be. Then the balance mix, depending upon a point of a time, whatever segment is most suitable for growth and delivering better returns compared to the risk what we undertake.
Okay, point taken. Let's speak a bit about your margins as well. Have you seen any pressure on margins due to rising funding costs rather, and any plan in place to protect margins over the next couple of financial years? Obviously, you will not be talking about numbers, I get it, but any game plan in place to ensure that margins are protected?
So, Nandita, the last 2-3 quarters, what you have seen is a normalization of margins, because if you look at the FY24 exit margins are as close or as same as the FY22 margins. So, we are a variable asset company because our housing assets company, our largely assets are a variable rate and our liabilities are partially variable rate and are partially fixed. Now, there has been a lag of flow through in the liability side, which resulted in a bit of an expansion in the margins in previous year, which has got normalized. Now, in our case, since liabilities are also to an extent variable and asset size are completely variable, over the cycles, you see a stable margins. And that is what is the construct or the nature of the industry is. So there is no specific things what we do separately. Of course, we try to optimize the borrowing and also to raise money in a way where our margins are protected in each of the cycle. That's a BAU for us, because that is what we are required to do as a mortgage company. We have been doing that and we'll continue to do that.
All right. Last question, really, Atul. Overall, how do you really see the housing loan market growing? What is the opportunity like? And any timelines in mind with respect to playing catch up with your listed peers?
Listed peers in terms of catch up in terms of. Sorry, Nandita, can I size? No, size. Your first question on the housing market, we believe that the market is likely to continue to grow. There are two factors because of that. One, retail credit in the country had been growing, and mortgage is an essential part of a retail credit. We are a growing country in both in terms of an urbanization and also in terms of an income level, and also in terms of nuclearization of a family, which is a social change. Now, all these factors lend themselves to more housing. Various government initiatives or a government beat is also towards housing for all, which again promotes the house ownership, and where housing loan becomes an integral part, or a construction finance also becomes an integral part to offer the product. Along with that, when we look at a macro level, a bit zoom out, in India, mortgage to GDP ratios remain comparatively low to other economies. So that tells again us there is enough scope to grow. Then when we look at the various research reports or various projections by agencies in terms of a growth in a home loan or a housing industry, they look like various industries, various estimates says 12 to 15%. So on a very large industry base or a very large base, this is a very decent or a very good growth projection. So I believe the market is going to do well. That is what our estimate would be.
All right. With that, of course, Atul Jain, want to thank you for taking out time and joining and sharing your thoughts with us, and of course your growth and expansion plans with us. Wish you all the very best for the IPO and the subsequent listing, and I look forward to interacting with you again post listing sometime.
Thank you.
Thanks a lot. Then that was the management of Bajaj Housing Finance sharing their growth and expansion plans with us. Of course, the IPO is getting good response from the the subscribers. Almost a quarter of the issue already subscribed within 1 hour of the IPO opening, and of course, we've seen how global and local marquee names have participated via the anchor book. But with that, we've come to the end of this edition of IPO Watch. But you guys stay tuned to Moneycontrol for all your other news and updates. Thanks a lot for watching.